Yeah, thank you so much, Paul. So as always, I mean, this is a subscriber story. So user trends are going to be the most critical element that kind of drives sentiment here for the stock. And so consensus has Netflix at about 4.5 million new subscriber ads. Remember, they already have close to almost 280 million global subscribers. The problem, Paul, is that subscriber growth is going to dry out at some point. In fact, just in a few quarters, from the first quarter of next year, they're going to stop reporting subscriber numbers altogether. So they're going to need a new growth narrative, and that's what investors are going to look for. They're going to look for any color on price hikes. They haven't raised prices on their standard plan in the U.S. now for almost 3 years. They're going to look for any color on advertising, which will be the new growth driver. And they're going to look for color on, the financial metrics, so operating margin, which is expected to be up over 500 basis points this year.
So talk to me about competition. How is Netflix doing in regards to competition? It seems like they're doing quite well, but it's interesting thinking about it from a consumer perspective when we're trying to decide where we want to get our content from, depending on the shows you watch.
Netflix has undoubtedly won the streaming wars. They are the undisputed leader in, streaming television. There's absolutely no doubt about it at this point. We're seeing average Netflix consumption of at least, 2 hours of content per day per member. So that's been steady. And what we've seen is, not only do they have a really deep library of shows, they're kind of exploring, or they're expanding on, their catalog of content, going now into live sports. They have reality content, they have films, they have, games. They're trying to do it all. And that's really kind of helped them build their subscriber base. The question now is, are they able to control churn? And we've seen actually just over the past few months that their churn metrics have actually been better than the rest of the industry. So it's one of the lowest in the industry, and it continues to actually go lower even as Amazon Prime, HBO Max, and Disney Plus are actually trending up.
Well, Geetha, that kind of goes to the question as we think about the broader streaming landscape. It seems like Netflix has withstood the onslaught by the traditional media companies as they entered streaming. How do we think about the streaming landscape ex Netflix? What are everybody else going to do?
Yeah, that's a really important question, Paul. I mean, everybody else now has kind of shifted away from just focusing on subscriber growth. They're getting more disciplined in terms of their content cost spending, and they're really trying to focus on profits. The question is, will they have enough scale by the time everything is said and done? We definitely think Disney is in a pretty good position. They've actually already turned the corner in terms of profits. HBO Max, again from Warner Brothers Discovery, seems to be in a decent spot. They have about 100 million subscribers. Disney has about 150 million. The problem really comes down with the rest of the smaller subscale niche players, whether it's a Peacock, whether it's a Paramount Plus, an AMC Plus. These are all niche services that will end up being somewhat subscale. We're kind of looking at different strategies. Now, if you look at Peacock, which is from, Comcast, they have only about 35, 40 million subscribers, but they're really kind of pivoting now to sports to really help them boost that subscriber base. They're going to have the NBA content come on to Peacock next year. They're going to have NFL. They're, obviously going to now add some regional sports networks there. But again, the question is how far can they take it? It's not probably going to get beyond 50, 60 million. And will that be enough? Will that really be able to cut it?